gold prices, I mean, they have been on a tear lately. In the last couple of weeks, the yellow metal has been hitting fresh peaks consistently. Now, the surge, by the way, is on the back of expectations that US Federal Reserve will soon start cutting rates. Now, with the first rate cut is expected to come somewhere in June or July of this year. And let's take a minute and really understand the relationship between the two, interest rates and gold prices. Gold typically has an inverse relationship with interest rates. When interest rates are low, the opportunity cost of holding gold, which by the way does not yield interest or dividend, decreases, leading to increased demand and higher prices. Conversely, higher interest rates can reduce the attractiveness of gold as an investment, leading to lower prices. Now, the spike in the yellow metal has also benefited gold loan companies like Muthoot Finance, Manappuram Finance and others. And I mean, this is of course because it lifts the value of the collateral held by them. And unsurprisingly, look at their stocks. Both the stocks are very close to their 52-week high. But Amit sir, coming to you, I mean, is that a theme that one can look at, considering that monetary easing is still down the road, or do you think the upside has largely been priced in?
I think I'm still not in a camp of that rate cuts will happen, as soon as June. Even though, the consensus is about 60% rate cut in June, my sense is that with the inflation picking up, especially in the metals and the commodities prices going up, even crude is now touching almost $90. The rate cut might just get postponed to, probably September or even further down the rate. So I think the gold prices move has got less to do with rate cuts and more to do with how the central banks are buying. In fact, last weekend I was looking at some data, and there has been not much participation in the US from the retail participants in the gold. So they are not really buying this gold. It's mostly the central banks which are buying the gold. So there could be a FOMO moment, there could be a 10% upside from gold. But I think the risk reward is still negative, because if rate cuts does not happen for 6 months and rate hike comes back on the table because of inflation, then we can also see gold prices declining again. Having said that, obviously the gold prices have moved up about 15% in the recent last 2-3 months, and they have a direct correlation with Muthoot and Manappuram, which are the gold financiers. Both these companies are also getting benefited because of gold loan ban on IFL finance. So there is a direct correlation between how the gold prices move and how these companies' stock moves. The correlation was actually very good till about 2 years back. That correlation has declined a little bit in the past couple of years. That could be attributed more towards very stiff competition in the gold segment. There are a lot of PSUs now which also do gold financing. There are a lot of private financiers which are also coming. So I would consider this as more of a trade rather than an investment. Till the gold prices are up, these companies will continue to enjoy the higher margins and higher profitability. But I will be always cautious with when the gold prices turn away.